a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about cybersecurity stocks and ETFs. So, in what the Wall Street Journal described as cybersecurity's Jurassic Park moment, two of OpenAI's most powerful AI models, they broke out of a test environment last month and they hacked Hugging Face, which is an open source AI tools platform. So these models were actually placed in a sandbox. They had no internet access, but they were able to escape. They were able to access the internet, and then they wanted to cheat on a cybersecurity benchmarking test. And then later, Anthropic and Meta also disclosed somewhat similar hacking incidents involving their AI models. So these science fiction like incidents, they just show state of the art capabilities of these AI systems, and they also show that these AI models can potentially be used by bad actors to cause significant harm. And then cybersecurity stocks also got a boost recently after IBM CEO Arvind Krishna told CNBC that cyber threats are currently a top priority for their customers. Now, you'll remember that earlier this year, cybersecurity stocks had sold off, along with the broader software sector, so called as Copilix, because there were concerns about that rapid advances in AI could disrupt traditional security software. But later, investors have realized that AI is more likely to expand the long term cybersecurity opportunity than eliminate it. And according to a recent Goldman Sachs research note, cybersecurity has shifted from being viewed as vulnerable to AI disruption to being seen as a clear beneficiary because increased AI adoption is expected to drive additional security spending. Now we know that businesses, companies, they are rapidly moving their operations to the cloud and they are adopting AI tools. So more data is being created and all that needs to be protected. At the same time, cyber criminals, they are using AI to develop more sophisticated phishing campaigns, malware, automated attacks. So that is why cybersecurity spending has become somewhat essential rather than discretionary. So companies may delay upgrading their computers or upgrading their software if there's an economic slowdown, but they cannot easily cut spending on cybersecurity because they want to protect their networks and critical systems. As according to Gartner, the worldwide information security spending is expected to reach about 244 billion in 2026 and 322 billion by 2029. Now, cybersecurity stocks, picking individual winners can be somewhat difficult because industry is quite competitive and changes quickly. So ETFs offer a diversified way to access this very important theme. So I'm highlighting three excellent ETFs. The first one I'm highlighting is the largest in this space by First Trust, ticker symbol Cyber, CIBR. It holds cybersecurity companies in technology and industrial sectors, 58 basis points expense ratio, and 15.4 billion in assets under management. If you want to learn more about this ETF, you can go to the code page on Zack, read our research report articles, and then use the link to go to First Trust webpage. For this ETF, it has 42 holdings, and you will see it is quite top heavy. Palo Alto Networks CrowdStrike and Fortinet, they account for almost 18-19% of the portfolio. Then the second one, which I'm highlighting, is by Amplify. This is actually the first, the oldest cybersecurity ETF. Ticker symbol is HACK, HACK. This launched in 2014, just after that very high profile Sony hack by which was attributed to North Korean hackers. So this was able to gather over a billion in assets very quickly then. Uh, so this currently has 3 billion in assets and charges 60 basis points. Again, if you want to learn more about this ETF, you can go to the quote page on Saks. And then using the link, you can look at other details. This was acquired by Amplify later, launched in 2014, and it has 23 holdings and little bit less top heavy than cyber. But you see Palo Alto Networks, Broadcom, and CrowdStrike are the top holdings in this ETF. The third ETF that I'm highlighting, which I actually own in the ETF investor portfolio that I manage, is iHack by iShares. This is one of the cheapest, 47 basis points expense ratio, and has 1.1 billion in assets. And again, you can go to the quote page on Zacks.com, and from there you can look at the details on iShares webpage for this ETF. And this has 52 holdings, more diversified than the other two: Qualys, Palo Alto Networks, Netscape, Netscope. These are the top holdings in this ETF, and you will see that this is a little less top heavy than the other two. On the next slide, I have the comparative performance of these ETFs versus the S&P 500 index to date performance. So you will see that Amplify ETF Hack is the best performing product. It's up 48% year to date. The other two ETFs that we discussed are up about 40%, between 39 and 41, and the S&P 500 index is up about 14% year to date now. Thanks for watching. Make sure to check out zax.com/promo for an interesting offer. Also, make sure to subscribe so that you do not miss anything. And I will see you next week.